Have you ever wondered what the tax implication would be if you sold your principal residence, aka your home? Make sure to watch until the end of the video to find out. Hi, welcome to my channel. My name is Irene and I'm a CPA here in Canada. I post videos explaining important accounting and tax concepts using simple language to help Canadians better understand accounting and taxes. Make sure you hit that like and subscribe button for more. So generally speaking, when you sell a piece of real estate for a price that is more than the original price that you paid for, that increased difference is typically going to be taxed as capital gains, assuming that the property is not a house flip and is not considered inventory. However, in Canada, if that property that you sold is considered a principal residence, you may be able to utilize the principal residence exemption to help shelter a portion of that capital gain or eliminate that capital gain entirely on that disposition or deemed disposition. In other words, you would not need to pay any taxes on that disposition. According to Section 54 of the Income Tax Act, a property is considered a principal residence when all the following criteria is met. So the first criteria is that it must be a housing unit. So that could include a house, apartment, condo, cottage, mobile home, etc. The second one is that the property must have been ordinarily inhabited by the taxpayer or the taxpayer's spouse at some point during the year. Please note that only one residence can be designated as your principal residence in any given year for each family household. Where it can get a bit tricky is if you have more than one principal residence in any given year. Factors should be considered if this is true. So let me illustrate an example for you. Let's say you bought a house in Vancouver in 2017. A few years later, you bought a house in Whistler in 2019. Both of these properties you ordinarily inhabited during each of the years that you owned them in. So technically, both of these properties are considered your principal residence for all the years that you've owned it in. So now let's say in 2024, you decide that you want to sell both of these properties. The principal resident exemption will allow you to shelter the capital gains on the sale of your principal residence. However, you can only designate one residence as your principal residence. So in this example here, from 2019 to 2024, you have to decide between either the Whistler house or the Vancouver house to designate as your principal residence so that you can shelter the capital gains on that particular property in those years. So in order for you to maximize on the principal residence exemption, you need to do a calculation to determine what is the optimal mix of where you would allocate or designate the principal residence to each of these properties. By choosing the optimal mix for the designation, that can save you thousands of dollars in taxes. Now let me illustrate another example for you. So again, you purchased a Vancouver house in 2017 and then later you purchased a Whistler house in 2019. And in this example, let's say you decide to sell the Whistler house in 2023 and then you decide to sell the Vancouver house in 2024. So in 2 separate years, right? So again, you're only going to be able to designate one residence as your principal residence in any given year. So in this example, you're going to have to determine which property you want to allocate or designate the principal residence exemption to for 2019 to 2023 because you own 2 properties during those years. So now let's say you decide that when you sold the Whistler property in 2023, you wanted to claim the entire principal residence exemption for the whole time you owned the Whistler property. And therefore, when you sold the Whistler property, you didn't pay any taxes at all. So now we're in 2024 and you're selling your Vancouver house. When you sell your Vancouver house, you're going to need to pay capital gains tax on the house from the years 2019 to 2023 because those years, you've already designated the Whistler property as your principal residence before. In this instance, for your Vancouver house, you are allowed to claim the principal residence exemption for 2017, 2018, and then 2024 as well too. Therefore, that can shelter a portion of your capital gains, but you're still going to have to pay a bit of taxes on that because you chose the Whistler house from 2019 to 2023. So if you're in this situation and you're planning to sell your property and you have more than one principal residence, I really highly suggest you talk with a CPA to see what your options are and what is the most optimal way to utilize your principal residence exemption because that will help you save thousands of dollars in taxes. When you sell your principal residence, you're going to need to report that on your personal tax return. You're going to need to fill out form T2091, and you're also going to report it on Schedule 3 of your tax return. If you are selling more than one of your principal residences in that year, you're going to need to fill out separate form T2091 for each property. So what if you decided to move out of your principal residence and you turn that into a rental property? Or vice versa, you decide to move into your rental property and make that into your principal residence. Well, this is going to be considered a change of use in the property. And when there is a change of use in the property, there is a deemed disposition that occurs. A deemed disposition meaning that you disposed of or sold the property as at the fair market value as at the date of the change, and you would have immediately reacquired the property at the same amount. So when there is a deemed disposition, you would have to report that on your personal tax return, and sometimes this can result in tax consequences. So again, a deemed disposition can occur when you change your principal residence into either a rental property or a business, and a deemed disposition can occur when you turn your rental property or your business operation back into a principal residence. So whenever there is that change in use. However, there are tax elections that you may be able to file if you fit the criteria. The elections will make it so that the change of use is deemed to not have occurred. So meaning that there will be no tax implications on that. It's best to speak with a CPA to see what options are available for you and how to better plan and prepare for that if you are in a similar situation. So there is a new anti-flipping tax that came into effect in 2023. The new anti-flipping tax states that anyone who sells a property that they've only acquired for less than 1 year, more specifically 365 consecutive days, will be considered to be house flipping. And any gains resulting from house flipping is going to be treated as business income with a 100% inclusion rate, rather than capital gains, which is only a 50% inclusion rate. So when a transaction is considered house flipping, you will not be able to utilize the principal residence exemption on the transaction. There are some exceptions to this new anti-flipping tax, which can include death, disability, change in life circumstances, divorce, and other items. So unfortunately, it might come to a point where when you sell your principal residence, you actually realize a loss because the housing market wasn't doing so well at the time where you sold it. If this is your principal residence, unfortunately, the capital losses on this transaction, you will not be able to deduct it on your personal tax return because it is your principal residence. The principal residence exemption is a super powerful tool that can help Canadians save thousands of dollars in taxes. Again, I highly recommend you speak with a CPA if you are in a similar situation or if you are planning to sell, because to make sure that you are better prepared for the tax implications that may arise and to be proactive in the tax planning. Thank you so much for watching until the very end of the video. I hope today's video was helpful. Please make sure to hit that like and subscribe button for more. And over here, YouTube thinks that you're really going to like this video, so I'll meet you there.